In this video, we will review my current P2P lending portfolio and the changes I made in November. There have been quite a few changes in portfolio distribution, so watch until the end of the video if you want to maximize your return and lower your cash drag. Remember that this video is no investment advice. P2P lending is risky and you might lose your money. Here you can see the outstanding portfolio amount on platforms where I'm currently invested. The right column shows how the portfolio has developed over the past month. I have slightly increased my portfolio on Peaberry in November. The platform announced its exit from the Polish market recently, which significantly lowered the loan availability on the platform. If you have watched my latest video, you know that I was planning to invest my funds in loans from the Czech Republic, Romania and Spain. Unfortunately, those three countries represent only about 5% of the entire portfolio compared to Poland, which amounted to around 17% of Peaberry's assets under management. This means that the competition for the desired investment opportunities is even bigger, which quickly led to more cash drag. That's why I have also added the business loan from Aventus and the loans from the newly launched Mexican lender. The business loan is distributed in loans from Mexico and South Africa. All the new loans are backed by the Polish loan book, which is part of the group guarantee. This move helped to deploy my uninvested funds on the platform. Outside of the currently limited opportunities on Peaberry, I am also looking at Crowdpeer, which offers a higher interest rate. So if liquidity is not a high priority for you, the diversification between Peaberry and Crowdpeer might increase the return on your investments. On Estate Guru, I continue withdrawing the repaid principal to lower my stake in the platform, as there are much better options elsewhere. Robocash and Esketit continue performing well, but it also means that the availability of loans I am investing in is limited. On Esketit, I am experiencing some cash drag as I stopped my investments in Jordan last month due to the increased risk in the region. The development of the performance from Vivus in Mexico and the repayment morale is rather disappointing. The platform is not communicating anything on their website and the buyback is not being honored. To my knowledge, there is still about €500,000 that has to be repaid to investors with exposure in Vivus. My investments in Fintown continue performing well. The fact that it's a relatively new platform means that the loan availability and interest rates are higher considering the liquidity aspect of their projects. Earning income from already operational rental units is an attractive investment with increased liquidity, especially if you commit your funds to a lower long term. My goal on Fintown is to take advantage of the short-term opportunities to keep always a part of the portfolio liquid. As you can see here, I can withdraw 60% of the funds immediately. Considering those funds earn between 8 and 12% interest per year from the rental yield, it's a much better option than investing in black boxes such as Bondora or Monefit for a lower yield with much higher risk. I'm also aware that those opportunities won't last forever. The yield will decrease over time as the platform gets more popular. My investments on Lande continue to perform, but the number of delayed loans is increasing, which is why I'm not currently growing my investments on the platform. The project updates are not very detailed, so I want to see how quickly they can resolve the problematic loans before deploying a more significant sum of capital. There are platforms with a better portfolio quality at the moment. At the end of November, the outstanding portfolio amount was €79,021, 2.66% higher than in October. This portfolio generated €642 in interest, 39% less than in the previous month. It's worth noting that last month Rapicredit on bonds repaid all loans with accrued interest, which increased the payout in October. As you can see in this chart, around 70% of the portfolio is diversified across just 3 platforms, namely Peaberry, Esketit and Robocash. The stake on Crowdpeer and Fintown also increased in the past few months. Regarding loan status, around 80% of loans are current, 8% are late and 9% defaulted. The default rate has slightly increased as I've also added the first 2 loans with the delay of 90 days on Lande and the incomes portfolio from Vivus into the default category. The war-affected loans in recovery represent 2.4% of the entire portfolio. This amount decreased by 5.59% relative to the previous month as Peaberry's lending partners continue the repayment of war-affected loans from Ukraine. Most of the loans in the portfolio are short-term loans followed by commercial and real estate loans. The exposure to rental units has increased compared to the previous month. The portfolio is well diversified across various countries. The exposure in the Czech Republic and Romania has increased. Most of the loans in the portfolio remain unsecured, backed by a group and buyback guarantee. A mortgage or machinery backs the secured portion of the portfolio. To summarize this portfolio update, the average investment per loan in November was €116. The weighted average interest rate slightly decreased to 11.05%. The portfolio is split across 680 loans in 15 countries. So that's been a quick review of my portfolio. If you appreciate the update, hit the like button and subscribe so you don't miss out on the next one. If you have made any changes to your portfolio, let me know in the comments below. Thanks for watching and I'll catch you in the next video.